welcome to another Burnews News and Views. I'm your host, Don Burgess. And with me today is somebody who's about to lose their Somerset card for wearing blue and blue on the week of that match. Deputy Premier and Home Affairs Minister, Walter Roban. Welcome.
Thank you for having me.
If it makes you feel any better, I think it was like 3 or 4 years ago. I went down to St. George's Cricket Club to get the team list on the night that it was selected, and I saw everyone just staring at me as I was walking in the club and things, and I realized I had been wearing a red shirt and blue shorts that day. So
yeah, not the right place to be on that day in those colors.
Definitely not.
Well, when I go to St. George's, I do try and wear blue and blue because I always tell them I come in peace. I come in peace, so they don't get too upset.
Not that cut match and wearing the right colors isn't important, but you're here today to discuss your speech that you had in the House of Assembly on Friday, where you discussed about bringing forth some legislation to protect consumers, in particular people who've taken mortgages out in their homes. How do you feel the COVID crisis has made this even more necessary?
Well, Don, thank you again for having me. Happy to talk to your watchers and readers about this issue. I think it's well known that COVID has brought financial challenge to many families and individuals through this time in different ways. And certainly from the standpoint of people and their property and the ability to service their mortgage and other obligations has become a challenge because of the job loss, the decrease in economic activity, and that has spiraled right to how people are managing their obligations with lending institutions. So we know that that's been an issue for people, and it's important that we all be sensitive to that.
What do you feel have been some of the problems for people with mortgages historically?
Well, this is not a issue with COVID alone. This is an issue that preceded COVID. One can take it back further to the period after the financial crisis of 2008. Many people found themselves in distressed situations on their obligations for a variety of reasons and had challenges servicing their loans and mortgages and other responsibilities they had. Landlords perhaps found themselves with tenants who were jobless or had a decrease in income. Landlords meeting obligations with the banks found themselves compromised, and business owners, small business owners themselves found the market wasn't as profitable for them, and their own obligations became challenged as well. So this is a situation that many are continuing, whether it was before COVID or now to come in, but our package of legislation and activities in relation to bringing a level playing field to the conduct and practice of lending and mortgages, we believe will help all of these parties.
Now, I know after the 2009 financial crisis, I was going through the RIT book on a regular basis for the Sun when it was in operation, and I've been flipping through it, and I saw like some of the things where somebody lost their mortgage after 3 months. The bank applied for it. There are other situations where somebody had paid 27 years, or it was on the books for at least 27 years. I think the bank eventually reclaimed that house or repossessed that house at the 31 or 32 year mark. What are some situations and stories that you've heard? I know you shared some in the house on Friday, but can you go through a couple of those?
Well, if you allow me, I can go through some of the stories that I recited in the house, if that would be appropriate right now. I think, but these are stories that are real, and I think they reflect the unfortunate situation where some people in their relationship with lending institutions and agencies haven't been treated fairly or equitably, and this has led to many people finding themselves in a situation where they lose the property. They essentially lose their aspiration to acquire property so that they can better their life. And we don't need to underestimate the impact this has on people. It's serious. And I think it ripples a certain distress that has been unfortunately historical in Bermuda. We all grown up hearing stories about persons who had their mortgage called for whatever reason, and it brought a lasting impact negatively on a family situation, sometimes for generations. So these are not what I would say minimal issues for people. As you may remember, the government did commit to having a commission to look at the issue of land and how people have been treated around the issue of land possession and dispossession. That's another matter, but I just make reference to those things to know that this is not a new issue. COVID has brought about a real reality, a stark modern reality around this, but these are historical issues that many Bermudians have and residents have confronted. And it's important that steps be taken right now to level the playing field. Some of the practices of which have brought fear and concern and anxiety into families, whether it be during this period or in preceding periods, have to stop.
Yeah. So what would you describe as some of those practices?
Well, let me go back, because you did mention you want me to share
A couple stories.
a couple of stories. So I'll share at least one at this point. A lender forecloses on a property and sells a home. The customer's property was sold at a fair market value, and the net sales proceeds were applied to the principal balance, leaving a shortfall of $100,000. The customer has been paying off the shortfall for approximately 6 years. So let's just look at that. I'll pause there for a minute. The person had a house. It was properly foreclosed on, and perhaps it was legitimate foreclosure. No challenge within that circumstance. But the customer is still paying off the shortfall 6 years after. That property might have already changed hands already. So there they are still, even though the actual asset that the value that the bank or the lending institution or agency provided the funding for is no longer in their hands. They're still, and they can go and like we sell that and recoup their investment, the institution, but that person is still paying it off 6 years after. That can't be right. That can't be right. So their ability to function and have any liquidity is tied up years and years after the asset upon which it was attached to is gone. That can't be right. That just can't be right in this modern era right now.
So what's the best practice in other countries or other jurisdictions?
Well, the best practice is that these types of practices, of which we want to address with changes to the Consumer Protection Act and other measures which I will outline to you a little later, have been discontinued years ago. And no longer are people subjected to these sorts of circumstances. And let me just highlight one other situation, which I think is probably one of the most grave of what we've learned about. Okay. And let me just highlight that to you, because I believe that this speaks to some of the behavior that we want to address through a proper code of conduct. Just to say right now, Don, right now, the conduct of lending and also around mortgages is a wild, wild west. There is no regulated code of conduct as it is in other professions or other industries for banks and how they conduct themselves with clients in these areas. It's a wild, wild west. And the banks have their own codes, but there's no code which is provided that a general basic principles of which they will follow that has any legislative teeth or authority. That's a part of the problem as well. So the behavior of these institutions now is really not supervised. And we're bringing some sensible supervision, which is based on best practice and standards from other jurisdictions to the table. But let me just highlight this one story to you.
Okay.
Just a minute. There have been a number of complaints over the years of the conflicts of interest issues. One example that was communicated to me was about an owner who was in arrears and was trying to find a way to save their house from foreclosure. The owner submitted a long-term rental agreement where the rents could pay the monthly mortgage payment. The agreement was refused by the lender, and the property was foreclosed. So options were presented. The actual person who borrowed the money bought an option to the bank to try and find a way that even the bank's investment could be recouped over time and would allow that person to keep their home. Because presumably, the prevailing view is that banks are not in the real estate business. Right? But here we go, seeing so that they didn't provide an opportunity. They didn't accept the person's recommended proposal for how they could keep their property, and the bank could still continue to make its money on the loan. So as I said, the agreement with the lender, by the lender, and the property was foreclosed. It was discovered later that the property was purchased by a senior member of the lending institution. So the lender refused, and then someone in the lending institution, backed up by the lending institution, clearly had a comparative advantage over the person who was in distress, was given the resources to purchase that person's property. That, even though that's not illegal, it is highly unethical.
Right.
And that's one story. And I can tell you, these are stories that have been repeated time and time again in many dining room tables and many families over the years. So we've got to stop this. We've got to bring a proper code of conduct, and I want to outline to you some of the things that we want to actually bring to the table with the changes that we are going to make. Don, if I can just outline them to you.
Well, just a second, Deputy Premier, just before you go on. I know when I was looking at the month or the quarterly banking digest for the Vermont Monetary Authority, and looking at the non-provision loans that they do every quarterly. The last one, it has it like at 5.3% for December 2020. And then I went to the Federal Reserve for the United States to see what their delinquency rate was during the same period of time. Was 2.5%, and I saw like the historical data, and I know that I have the same data on the BMA site. But traditionally, Bermuda's had twice a high non-provisional loan as compared to the U.S. So is part of the problem then that the banks are giving loans to people who maybe shouldn't be getting loans in the first place?
I think that's a very possible situation that we are seeing, although those issues aren't really within the remit that I am trying to actually address. The issue of, and I think you know that there's been a huge discussion over the last 4 months about the interest rates that the banks are charging, and how there's been a request generally for them to adjust those rates to assist people during this time.
Right.
I think we saw, and this is just my own, well, I wouldn't say my own view, but I think this is understood, that there was a period of time in Bermuda, particularly in the 2000s, mid-2000s to up until the recession, that there was quite a bit of liquidity. People were gaining mortgages at like 100%, from the banks, and the banks were literally giving away money.
Right.
So there were, and many people took advantage of that. Now, those are the same people now who are probably in distress, because the terms of that lending now may be difficult for them to maintain, perhaps their like property value has also declined, and other issues of which may be confronting them makes it challenging for them to service that obligation.
Yeah.
But that was also an effort by the banks where they took advantage of people's zeal and, I guess, enthusiasm about borrowing money. And that's how banks make money. That's how banks make money. This is a capitalist society. Banks play a role. They make money by lending. You and I put our measly pieces of change in a savings account. They use that to invest, and they put out mortgages of which they earn a higher rate of return.
Right. Well,
And that's understood, and no one's trying to begrudge that process because that process contributes to the economic system and productivity of the economy. They lend that to individuals for lending, lend that to businesses for loans, and that helps to grow and the economy to prosper. So I'm not begrudging that. It's the conduct and behavior around those practices that we now need to bring some structure to. So let me just outline what we want to do and the protections we are desiring to put in place, which we believe will help this relationship. If you don't mind.
Yeah. Well, just before you get there, I mean, just and it needs to happen because the banks, according to the monthly digest, quarterly banking digest from the BMA, 53.7% of their loan book are household mortgages. So obviously, to your point, that's where they're making their money. But if the consumer is starting, I know you're trying to remedy the end result of it, but if the consumer starts off already in a bad hole to begin with, like an unfavorable situation, that could decrease some of the remediation that needs to take place later on when they get behind.
Yeah. Well, that's also a part of the picture. We need to have better educated borrowers.
Right.
And we all should. This is the personal responsibility piece, Don, to this. So I'm not just trying to levy that the banks are all, and I'll use this word lightly, they're all these sort of sinister institutions that just prey on everybody. I'm not even trying to suggest that. What I'm trying to suggest is a number of things. That there needs to be a balanced relationship between consumers, borrowers, and lenders, that relationship needs to be more transparent, but it also needs to be an educated relationship. Right. People need to fully understand the type of obligations that they're getting into when they pursue a loan or they pursue a mortgage, what their long-term responsibilities are in that process as well. And that's going to be a part of what is required to be done when people want to enter these relationships. But I would also argue is that we all as residents need to build our financial literacy.
Right, which is part of
the personal responsibility piece here, that we all should see financial literacy as a healthy part of our lives, that we acquire better understanding, better knowledge, better tools on our own, so that we, in our engagements, whether it's with our own insurance policies, whether it's with other financial arrangements we make, that we understand what we're doing and that we build our own personal competencies in these areas as residents. So that helps us as we engage. The same way people will go online and look up little, like if they feel sick, they go on the internet and they look up, the symptoms, and they find out, on like the internet, what they may have. And then they go to talk to their doctor. They might even research possible remedies for how they feel. And they do that ahead of time before actually going to the pharmacy, going to the doctor. This is the sort of literacy that I think we need to actually build within our financial environment and our financial welfare. Each of us needs to take on some personal role in building a healthy financial welfare for ourselves.
Well, and that's part of your legislation. The banks are provide some of the information. So why don't you go ahead?
But also people are, I'm advocating that we all must take it on as well. We can't just let the government or the banks be the ones who educate us. We must take on the opportunity to educate ourselves before we enter into these arrangements and have just a better understanding on so we can make better financial choices generally for ourselves. Right. So I'm also advocating for that. But the reality is that the situation we have now, we know that there is a higher level of distress as a result of COVID, and people need protection just as we did initially with the debt collection legislation. This is the next phase of bettering the health of the regulation of the financial environment in Bermuda. But
Right.
let me just go through some of the things that we want to put in place as protections, which we believe will assist. So like the minister who's responsible for consumer affairs, Don, will have the authority to create regulation that will relate to consumer protection around mortgages and loans. There will be the establishment of a tribunal that will actually hear complaints from consumers and arbitrate any arrangements which potentially are distressful as well.
If I stop you just right there for a second.
Sure.
You talk about a tribunal. How will that be composed?
Well, it'll be composed of competent persons attached under the Consumer Affairs Department and the Consumer Affairs umbrella. So there'll be competent persons on that body, and they will essentially hear and consider complaints of any consumers have about their relationship they've had with a lender, and perhaps help them to, and like determining if this is a situation that needs to be addressed. They will certainly consider it. And then ultimately, if there needs to be some arbitration between the two parties, they will enter that as well. But that's sort of how it will happen. It's not an unusual system to like have in place, and is actually in place in other jurisdictions as well.
Okay.
But let me go on and just recite some of the other ones. Introducing penalties for non-compliance of the regulations. Also, and this is the key one that we were talking about earlier, is providing community education and also more communication around lending, so that people are better informed about what their responsibilities are, but also what they should expect from a lender. So we should also know what our responsibilities are, as well as know what the lender and how we should be treated by the lender. And as I was talking about the conduct of these institutions, right now being a wild, wild west, there is nothing in place that is regulated that governs the conduct of institutions in the financial area of mortgages and lending. So we're going to bring a code of conduct around lending and for lending officers and agencies. And this would include what is best practice. It will define unfair customer treatment and unfair lending practices, and introduce remedies for if those practices are discovered. We will be defining the rules governing foreclosure, so that everybody, because maybe different people have had different experiences around a foreclosure. So we're going to make it clear as to how a foreclosure should be conducted, and also eliminating this issue of persons having to still satisfy the shortfall after the property has been seized by the lender. We're not, we're going to move away from that. And also requiring lending agencies to introduce what is called truth in lending, Don. And that means that the customer will have the right to a detailed and clear disclosure of the following issues: the amount of the loan and its payments, prepayment penalties, due dates, late charges, upfront fees, variable and fixed rates, and payment and default and foreclosures. And payment default and foreclosures. So we're looking to bring more structure, more transparency, but more fairness to these relationships. I think there's been such a long history, anecdotal and factual, because I think I outlined to you some of the story, where people feel that you have the lending institution that's the Goliath, and they are the little person.
Right.
You have the giant, and then you have the smaller person who feels, even walking in the door to a bank, you feel overwhelmed, you feel fearful, you feel nervous, almost unsure of yourself. I think we have to provide some basic elements and resources so that people feel at least they're going into a financial relationship as a partner, not as a victim, or that they're like giving up some part of their life just to aspire to bettering themselves or their condition. And banks play a positive role in this process, Don, let's be clear. They play a positive role in the economy, a positive role in its development, a positive role in growth, and also opportunity for people. But there has been practices which have brought fear and intimidation, and that has to stop. And we've got to change that so that people feel a sense of fairness and a level playing field is when they enter into these relationships.
Part of the thing is we're dealing with foreclosures, and I can remember, like, in my own experience with the bank to take out a mortgage. I don't think I was ever had any talks with the bank. They didn't talk to me about, what would be the foreclosure process if I
Yep.
ran into default, and how many, like, whether it be 30 days, 60 days,
Yep.
or days,
Yep.
and
Yep.
what would happen, how they would try to work with me or anything like that. So you want to see that as part of the before any papers are signed.
Yes, people need to know the whole terms of the like arrangement from beginning to end. Now understand, we are doing all this to provide the balance in the whole relationship. But it's also important that a number of things also happen when these things happen. Because usually people find themselves in a situation, it's after, and they may have gone and had a process where they felt very comfortable with when they initially entered into the arrangement. But usually things get very dicey is when there's distress. And people often are irrational in their actions because all they want to do is save what they have. So they may actually not go to the bank in a way that they feel comfortable, or they go to the bank to sort it out, and then they're not sure that whatever the arrangement they've put in place with the bank is actually workable for them, and they may sign to it, and then their situation doesn't improve. They don't go back to the lawyer, who perhaps quite properly advised them in the transaction at the beginning end, and go back to that lawyer to get advice as to how they should conduct themselves in their distress situation.
Right.
Or they can also hopefully, once we get this in place, and I say hopefully because I'd like to do this as soon as possible, when the legislature resumes, is they can come to Consumer Affairs and get advice as well. We do not yet have the power to actually govern these issues around lending and mortgages. But that's what we intend to acquire through these changes to the Consumer Protection Act. And we'll be able to provide more help, deliberate help, for persons who find themselves in a situation, and proper advice and proper guidance, and help them find the fairness that they frankly deserve. Because most people enter into a loan or a mortgage arrangement to improve, to prosper, to make their life more healthy. It's not necessarily about greed or acquisition or to gain an advantage. It's actually to improve, to like prosper and have a more healthy, sustainable future for themselves. We should help people to do that. And we believe that that financial institutions also have a ethical and moral obligation to participate in these arrangements from that premise as well. And we just want to find a way to provide basic standards so that can be the premise upon which these arrangements are built.
Yeah. I just want to point out a couple of reader comments here. Carmen Lindo posts that maybe they don't. However, I took multiple options to a financial institution over a 2-year period, and they declined each one, finally exercising the right to sell, and sold for less than the market value. That house has since then sold twice, again, I'm told, and I'm still paying off the difference. So to what you were saying before.
Carmen should not have had to face this situation. That's all I have to say. And I'm hoping that going forward, what we're trying to do will help some other Carmen Lindos out there to not have to face what Ms. Lindo is facing, because I don't think that's right.
Right.
Ms. Lindo is still paying off her obligation, and the house is already rolled over twice, if that's the case, if that's the facts.
Right. Yeah. Another one, Steve McGinnis post, if the shortfall element is removed, wouldn't that mean banks will be more restrictive on lending and require more cash up front and make it more difficult to buy a property?
I've heard this one already, and I don't buy it. Banks make money when we walk in, we give them money, and they lend them to others at favorable terms to get a return. So why would a bank make it more harder for people to borrow? Because that's how they make money. In obviously that's not a sustainable model for any bank to continue to be profitable on, because if they make it difficult for people, people will go elsewhere. Perhaps the only fault in Bermuda is that we don't have a more competitive banking market, that there are more places where people can borrow, so that if a bank does present unreasonable terms for borrowing, you can shop elsewhere. Or banks, we know obviously there are jurisdictions, we see the commercials all over the media where banks compete for a person's business. And literally the banks are competing for their lending business. That's not the case in Bermuda. But ultimately, banks around the world make money the same way, by providing lending at favorable terms that will allow them to earn money. So I do not believe that Mr. McGinnis's proposition is credible or sustainable. Obviously, rates go up and down, but the level of interest rates is a perhaps discussion for another time, and also is for another minister, i.e. the Minister of Finance, who will probably happily come on and speak to you about the issue of interest rates.
Okay. Well, I know,
and the cost of borrowing.
Not part of this conversation, but I know, the government would like to see another bank set up here, mainly through to handle several different issues, casino money, and as well as bitcoins or that sort of deal.
Well, this government desires competition throughout the economy. Mm-hmm. We believe that all sectors of our economy need to become more competitive, more open, and this will be a path to greater growth, greater activity, and more jobs. So from the standpoint of banking, if that satisfies all those requirements, we are favorable. I think we've been very clear that we are favorable to a more open, liberalized banking market that will provide more options for customers and potentially make these activities more competitive, and I would say probably more fair.
Right. One of the things that you talked about on Friday and you mentioned here again today was introducing penalties for non-compliance with regulations. What do you mean by that, and can you give examples?
Well, I do believe that if we find that the lending institutions aren't abiding by the regulations as they will be proposed, there will have to be penalties levied.
Okay. And also, you talked about you want to introduce a code of conduct that will govern all lending officers and agencies. This looks like individual officers will be held accountable for their actions as well as the lenders.
Yes, they'll probably, if they're attached to an institution, that institution will have a basic standard of conduct and behavior, of which will mirror the regulated conduct code. And yes, so perfect example that I outlined is where a individual who works for a lending institution benefited from the detriment of a client of that institution. Is that ethical? Should that be legal? Continue to be legal in Bermuda? Conduct like that, because that person, clearly that person who worked for the institution had a extra advantage with the knowledge and the resources and expertise that they had as a lender. They were allowed to take advantage of a situation of detriment because of that. And as in other professions where there are codes of conduct and ethics, I think we need to make sure that within the banking sector in Bermuda, that is also the case. So yes, clearly we may find that, licensed officers and agents within those institutions will find themselves being governed by a code of conduct for their behavior as well. Because they do operate with a special advantage, with special information about things that are going on financially that others like you and I, who aren't in those institutions, do not know and can potentially take advantage of situations as a result. I believe the situation that I outlined clearly articulates that. That's what can happen, and we need to have a proper regulated code of practice on not only institutions, but also individuals who work in these specific areas as well that have to follow.
Similar to insider trading on the
Yes.
stock.
I think one would argue that that is comparable to an insider trading situation
Okay.
where they actually bought a property that was distressed and that the bank had foreclosed on to their benefit.
Okay. Anything else you want to add, Minister?
Well, I would just like to assure the Bermuda public help is on the way for many people who have found themselves in the situation. It is our desire to bring a level playing field to the relationships around mortgages and lending. And it's not just about punishing the banks. It's about, yes, creating much more fairness in those relationships, but also requiring us as individuals to build our financial literacy and our understanding of these relationships prior to entering to them, so that when the distress may come, and it's nothing that we all wish on anyone, you know what options you can actually consider to help yourself and to ensure that you have a sustainable relationship with your institution of choice. So we want to build literacy, build understanding, have greater communication, greater transparency, and fairness within the relationships around lending and mortgages, and better protections for consumers who certainly will need them and do need them right now.
Right. And as you mentioned during the show, that speak to their lawyer, go to consumer affairs.
I do encourage that. Go to the bank itself to discuss your situation openly, frankly, and honestly. Take advice from a lawyer or a person who has proper expertise in the area of financial management or financial health or financial care, or even the lawyer who may have assisted you with entering to the mortgage arrangement. And also come to consumer affairs, because even though we don't have the legislative authority, we can give people help and assistance in these situations if they need them, to like the best of our ability.
Okay. Thank you very much for coming on. It's a shortened work week for
all of us.
So we really appreciate having Deputy Premier and Home Affairs Minister Walter Roban here. I hope you have an enjoyable cup match. And
yes, thank you. Happy Emancipation celebration to all of our residents, and happily a new Merry Prince Day as well added to the 2-day holiday. And perhaps because of the change that we're having to the holiday, it will allow us to actually understand the meaning and true meaning behind the cup match celebration and why it's so important to Bermuda and to all of us.
Yeah, and that's actually probably a good point, because I mean, if the cricket match was going on,
yes,
most of our
yes, and like the cricket is important, but it all comes out of something that we should understand, appreciate, and respect as well.
Thank you. I'm your host, Don Burgess, for Bernie's News and Views. And as always, have a beautiful day and a Bermuda.
Hey, everybody.
Thanks.